So hello guys and welcome to another episode of Finfluenced, where we talk about how we got finfluenced by the finfluencers, and this time the finfluencer is AI. And as always, let's take the stock of the week, and this time it is one of the very hot stocks in the last few years. It's Trent, a Tata company in the retail and apparels business, and apparently one of those kind of companies who have shown that they only go up and up and never give opportunities for sensible investors to take an entry on. So today we are going to evaluate, using AI, using Google Gemini, how does the outlook look like? How is the outlook for Trent in the short term, in the long term? What are the investability criterias? And without any further ado, let's get started. So I have already prepared this report because this deep research takes time. So I had to re-engineer the prompts to, optimize the reports properly. But what I have done is I have created documents on the Finfluenced website, which I will link down in the description, and you can download these reports. Make sure that you understand that this is an AI generated report and not financial advice. No financial advisor has been consulted. This is pure play AI generated deep research. What I have done is I further asked Gemini to create an interactive infographic out of this exact report. Wow. I'm going to do this with every stock of the week in the further episodes. So if you like this content, make sure to hit that like button, and also please subscribe to Finfluence to get regular updates on stock of the week every week. Trent Ltd. So let's get started. Executive summary and key highlights. Trent Ltd stands out as a robust player in the Indian retail sector, driven by aggressive expansion of flagship brands. This section summarizes its strengths, strategic positioning, and key financial achievements. Revenue in FY25 is 17,000 crores, operating margin of 16%, ROE of 43%, and debt to equity of 0.41. Trent's success is rooted in its strong emphasis in own brands, which ensures greater control over product design and margins. The highly capital efficient franchisee owned company operated model, that is FOCO, especially for Zudio, has been instrumental in driving impressive returns on capital. The company expertly leverages India's rapidly expanding consumer market, increasing urbanization, and the shift towards digital retail. Now, I don't know if you have visited Zudio or not. I mean, I would be shocked if people watching this video have not visited Zudio or Westside. But you may have noticed that they are always very up to date with the fashion. Not just up to date, in fact, in some cases, they are also trend setters. However, maintaining an extremely affordable average ticket price, and also knowing the fact that this brand is backed by the powerhouse of the house of Tata, there's an innate sense that whatever I'm buying at whatever price from wherever I'm buying, because it's Tata, it's meant to be quality. I would say that this is a phenomenal model that Trent has built. I think that is exactly what has been driving the stock price. It is just anybody who reads about Trent becomes mind blown straight away. Financial performance analysis. Deep dive into Trent's financial journey. As we can see here, sales and operating profitability. Trent has seen remarkable sales recovery and sustained growth. Operating margins have expanded and stabilized, reflecting enhanced efficiency. And if we see, right, in FY21, while sales of Trent were just about 2,500 crores, operating margin was just about 4%. From sales of 2,500 crores to sales of 17,000 crores. That's 7x. 7 times the amount of sales that they have done in the last 5 years. And their operating margins have gone up from 4% up to 13%, then 14%, and stabilized at 16%. You see, in FY21, they were at a net loss of 181 crores. But then once they started making a profit, it just went bonkers in exponential value. And the EPS has gone up to an EPS of 43. That is, again, a massive wealth generator. Capital efficiency and debt management, if you look at, Trent demonstrates excellent capital efficiency with improving ROE and ROCE, alongside a significant reduction in debt to equity, enhancing financial stability. Brand and expansion strategy. Trent's growth narrative is anchored by its powerful brand portfolio and its aggressive yet disciplined expansion strategy across India's diverse retail landscape. The store portfolio composition. Okay, that is an interesting analysis. Zudio is the primary driver of Trent's store count, complemented by the established westside network and emerging lifestyle concepts. So we have Zudio, which has 765 stores, 248 stores of westside, and 30 stores of other lifestyle concepts. And Trent has another brand that is called Star Bazaar, which is more like a Reliance Smart, Reliance Fresh, or that sort of a thing. And if you live in Bangalore, you must have seen certain buildings. In an entirety, it's a Trent building, where on the ground floor you may have a Star Bazaar, on the first floor you will have a Trent, and on the top floor you will have a Westside, or something of that sort, or similar architecture specific. But in the same building, you will have only 3 brands. So that's what I like to call them as a Trent mall. And that's fascinating to see that one company having 3 brands catering to a variety of demographic has set up shop in the same building, which speaks a lot about, number one, the capital efficiency, second of all, the confidence in their marketability, which I'm absolutely fascinated by. Aggressive store rollout. In FY24, 150 Zudio stores were added and 30 Westside stores were added. In 25, 244 Zudio and 40 Westside. Strategic pillars of growth. The own brand strategy. Over 97% of fashion revenue comes from exclusive in-house brands, providing superior margin control and product differentiation. Omnichannel integration, profitable growth of westside.com, and seamless integration with Tata new platform, enhancing customer reach and sales. Diversification into emerging categories, successful expansion into beauty and personal care, innerwear and footwear contributing over 20% of fashion revenue. Capital efficient FOCO model for Zudio enables rapid expansion with lighter capital expenditure burden for Trent. Competitive landscape and growth triggers. Yeah, growth triggers. We are most interested in this. Trent operates in a fiercely competitive market. Its future growth hinges on leveraging its strengths and capitalizing on key industry tailwinds while navigating challenges. The competitive pressures are that Trent faces intense competition from both large conglomerates and emerging players in the fast fashion, value retail, and e-commerce. This intensifies pressure on the market share and profitability. Now in fashion, you have Reliance Retail, you have Aditya Birla. Aditya Birla has your sub-brands like your Allen Solly, your Louis Philippe, your Van Heusen, Reebok, and probably a couple of others that I don't know. Departmental stores would be Shoppers Stop. Hypermarkets and groceries have a direct competition with all kinds of quick commerce and DMart. Online retailers are also Flipkart and other e-commerce giants. Observed slowdown for like growth for fashion and Star business. Star, I believe, is Star Bazaar. Suggests potential store cannibalization and increased competitive impact. That is interesting. And of course, in the financials here as well, we can see that sales has grown quite substantially in the last 1 year, but the operating margin has not grown. Now let's focus on the key growth triggers. Several powerful factors are poised to drive Trent's sustained and robust growth in the coming years. Operating leverage. Operating leverage. As sales grow, fixed costs are spread over a larger base, increasing profit margins. Okay, yep, absolutely. If they do a lot of store expansion, they will have sales per store. Capex utilization growth, new stores mature, lending to higher sales. That's exactly what I said. Higher sales per square foot and improved asset productivity. Rapid store expansion, continued aggressive rollout for Westside and Zudio, especially in tier 2 and 3 cities. Demographic dividend and urbanization, where young population, rising incomes, and increasing urbanization fuels the consumer spending. And of course, with the new ease of taxes in the current financial year, we should see increased consumer spending. Also with the reduced interest rates recently done by RBI by 50 basis points. Favorable consumer trends, premiumization, cultural sensitivity, and demand for sustainable practices align with Trent's offering. And before we move on to investment conclusion, which is not investment advice, as I remind you, let us go and look at Trent's technical analysis. Trent's technical analysis is pretty straightforward. It has been overvalued since forever. Then when the markets went bad in September, October last year, and it started falling, which has cooled Trent down quite substantially. And it does look like it has picked up speed again. But there are a couple of resistance zones on the upside. While it was known that at its peak, it was massively overvalued. And if we go and look at the PEratio history of Trent, you'll understand what I'm saying. The median PE of Trent is 178. 178. And even right now, yes, of course, it is lower than its median PE, but it is still at 133 PE. It's a crazy risk because there's so much expectation, a lot of it already factored in, a lot of it is still there. And A miss in sales, a miss in profits, a marginal margin dilution can just drive down the stock price very, very fast. But then Trent also has had a great record because all the earnings have been positive since the time I have been tracking it. So it is just crazy to even imagine that Trent will ever go down. There are probably people who are saying that no, Trent is already saturated, they cannot expand and gain more sales and all that sort of things. But I think people are underestimating the sheer population India has. And if Zudio in your tier 1 city has already expanded and saturated its market, which I doubt it has, just go to the outskirts of the city and see how many people are wearing a Zudio brand or a Westside brand, and how many of them actually aspire to get that kind of a product, right? And if a store opens right beside their house in the outskirts, they will just rush down because the ticket price is not as high as other brands like Zara. I would like to have Trent in my portfolio, but not at these valuations. Again, I'm not advising. It is my opinion about my own portfolio, but it is interesting to see how a large cap company, a 2 lakh crore company, can be sitting comfortably even after a big fall at a PE ratio of 134. It's just crazy. Coming back to our report, what is Gemini saying? Investment conclusion: investable at premium valuation. It says Trent is assessed as investable, exhibiting exceptional top-line growth, robust financial health, and commendable operational efficiency. Its aggressive expansion, strategic brand focus, and capital-efficient models position it as a compelling play on the rapidly transforming Indian retail sector. The company is currently trading at a premium valuation reflecting high market expectations for sustained future growth. While this comes with inherent risk, Trent's strong fundamentals and strategic agility provide a compelling long-term investment narrative for those with a higher risk appetite. This is extremely crucial. That if you have a high risk appetite, I would say if you have a more than just high risk appetite, and it is just, I don't think it is in my appetite right now. Key monitoring points would be like-for-like growth, inventory management, evolving competitive landscape, and continued omnichannel performance. So coming to our AI portfolio, I have invested slightly more. I have kept some cash. I've done some downward averaging on PGEL, and if you see the changelog, on 2nd of June, I bought around 4 shares of PGEL on this, while the overall portfolio performance is still the worst of everything that we are tracking. Again, as I've been saying in the last few videos, it is too early to say because the thesis that we are playing on is a second half of the year play, which is starting this month. So hopefully when the quarterly results for the next few quarters come out, I would say that the hype would be actually then crazier than usual if our hypothesis is proven right. Otherwise, we are doing the stock of the week every week. And if there's something that we think we need to have it in our portfolio, we would absolutely replace one of these stocks with the stock of the week of that particular video. However, Trent this time is not the one. And I hope you like the content, and if you want to see more of this, please click on the subscribe button, and I will see you next week. Bye.
गुजरे